Today, I want to talk about the myth of the Bitcoin cycles. Honestly, this has been one of the biggest questions that has always plagued me a bit. And even though all my friends and all my colleagues claim that just take this as is, that the Bitcoin cycle is going to work, I think this time around in the 2024 cycle, this has been so many times proven that the cycle is getting thrown off. So just think about it. We have some people calling for an accelerated cycle where the Bitcoin halving event, once it happened, the Bitcoin price was already revisiting its previous all-time high and made a new all-time high. This has never happened before. But now, after that, we have had a first dip in the past couple weeks where Bitcoin has gone to 53K, but now it seems that everything is back safe again. So what's really happening? There is really such a split idea now in the community. Some people are saying the cycle is already over. Others are saying it's getting accelerated, so it's just starting. And other people are saying, okay, it hasn't even started and it's a super cycle. So really this idea of the Bitcoin cycle, as we knew it before, based on the 4-year timeline and centered around the Bitcoin halving event, I think it's really getting disproven now. Nobody can really just only take those few data points and tell you on the chart that this is what's going to happen. And people just keep extending the range prediction for the cycle further and further out. And that's why I went back to the drawing board and I looked at some of the metrics that not only drive Bitcoin, but also other markets, such as, for example, the M2 liquidity and the federal funds rate and how that affects overall markets, all risk-on asset markets. And also there is something very interesting called the Global Liquidity Cycle that cycles every 65 weeks. 65 months. And this isn't exactly 4 years, but it does coincide a little bit with the last two Bitcoin cycles around the 4-year mark. And these cycles, these larger liquidity events actually show much more promising predictions for when the Bitcoin cycle actually ends. So this is why I'm going to get into this today, and that's the topic of today's agenda. So I'm going to get into these two liquidity cycle events around the federal funds rate and how that affects the money supply or the inverse of it. And then the global liquidity index and how that affects all markets and what that's saying for all markets, and in turn also Bitcoin's reaction over the next 12 to 18 months. And I'll give you guys my price prediction, which is also still going to be the same as my prediction for last year, but the timeline prediction, I think we actually have some really strong data points now to go off of. Not because of when the Bitcoin halving happens or what the price range may look like, but actually the real liquidity events. Okay, so that's on the agenda today. If you guys are new here to the channel, welcome. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Now, really quick, I just want to show you guys the current Bitcoin bounce. So Bitcoin looking quite strong in the short term. Let's just get this out of the way. We are both above the 21 weekly exponential moving average on the weekly EMA here. You see this blue average line right here. So we have closed back above the 21 weekly EMA, and if we look at the daily EMA, we take the 200 and we go to the daily chart. We have also dropped below the 200 daily EMA, had a bear trap and closed back above it, and now is actually bouncing back above there. So you can also say that we have gotten a lower low, but now potentially a new higher low. So the uptrend could be resuming here as long as we hold above right around that 60,000 mark. Now, in our last live stream on August 5th, just around 2 weeks ago, my stance was that I was starting to DCA at 53K per Bitcoin. I could see two scenarios. Either Bitcoin continues to chop until the FOMC meeting. Right here, you see this date range. the FOMC happening on September 18th, if I'm not mistaken, Bitcoin should continue to, the worst it could get was something like this, where it continues to chop. In that case, that's fine. If something breaks, the Fed is going to step in, so we may see a sharp recovery. But either way, that was the period to DCA in. Now, I didn't expect the recovery to be this strong. So when we made that live stream, it was literally right here, when Bitcoin was basically right here, 53K. And I was DCAing. Now, a little bit too late, but if I could have bought a lot more, I would have done so. But pretty glad that I didn't make the other opposite choice that a lot of people were making, to call this very quick. I was basically waiting for this to come back above the 200-day EMA or the 21-week EMA. But I didn't expect this to happen so soon. I expected it to happen towards the end of September. Nonetheless, this is really good to see Bitcoin having a strength so strong, actually showing a V-shaped recovery like this. Now, a lot of this come from last week's major development coming from the US Fed, and that is the Jackson Hole event. So at Jackson Hole, policymakers, including Jerome Powell, have said basically the pivot is here. Remember, last year, the Fed pivoted from rate hikes to rate pause. This happened around the September meeting, around last FOMC in September 2023. And then rate hike, Fed funds rate has been paused for 1 year at 5.25 to 5.5. And now, Jerome Powell has literally said the time has come for us to pivot our interest rate policy to go back to quantitative easing, and we're going to cut our target rate in the next FOMC meeting on September 18th, if I'm getting the dates right. Yeah, September 18th. And this has sent all risk-on markets to rally, rightfully so, even though we have been speculating for over a year now that the pivot is going to come towards the end of this year and rate cuts will happen. Now it's confirmed. September 18th, rate cuts are happening. And I just want to show you how accurate actually this CME FedWatch tool has been. So I have been tracking this tool on live stream as well publicly for the past year. Notice this is our live stream on July 27, 2023. And this was when we were basically saying that the Fed has paused rate hikes at the 5.25 to 5.5% top. We called this to be the top, and based on obviously Jerome Powell's speech, but also mostly because of this CME FedWatch tool. This was our live stream last year. So you see how this tool has said that September 2023 rate hikes were most likely paused, 80% chance. So the Fed fund target rate will stay at this level for multiple months. And this did happen. So if you look at the actual federal funds effective rate, this comes from the Federal Reserve data directly. You see this rate was paused starting August 2023 until today. It's still at the same level. This tool, even though it's based on just like expert analyst estimates, averages, very accurate. And in fact, the other major signal that we got even over a year ago was that the probability for the rate cuts to happen, the prediction of it was that by July 2024, the FOMC meeting, there was a 93% chance the rate cuts would have happened. In this case, that's why it says ease here. And by the September meeting, 97%. And we know that now, July meeting, it didn't happen, but the September meeting, it happened. So this was also very accurate. And honestly, this was kind of shocking to me, even though it was like a year and 2 months beforehand, they were able to predict this. So I'm going to say, if you're looking to project over a year out for FOMC meetings, what the Federal Reserve in the US will likely do with their rate hike or rate cut policies, this is the number one thing you should check out. This is very, very accurate. So what this tool is telling us now, after Jackson Hole last week, is that there is a, right here, 69.5% chance that we will have a 25 basis point cut, or I'm not getting my basis points right, but either we have a single cut, which is 69.5% of people agree, or we have a double cut, 30.5% of people agree. Basically, these two add up to 100%. There is no chance that we don't get a cut in the September meeting. If you're still in the camp that speculates just because you have been so disappointed in the Federal Reserve's decisions, well, take that bias out of your head. We are for sure getting a cut in the September meeting. Now, the only question is it a single cut or a double cut? So with that out of the way, this is a large reason why the stock market is rallying, S&P, NASDAQ, every risk-on asset is rallying, and so is Bitcoin and the crypto market. And just the last little bit, we need to hold above the 200-day EMA and the 21-week EMA. And as long as that happens, I think by the actual FOMC, we are likely to test the previous all-time high at 71K. I think that's highly likely. And we still have, around 3 weeks to go. So plenty of time for Bitcoin to continue this rally. So things are looking bright. Now, that's my short-term prediction. Continued rally until FOMC September 18th. Now, next, let's get into the Bitcoin halving cycles comparison. What I mean by that is you have a lot of these cycle charts. Whenever you go on Twitter, you go on any sort of Bitcoin so-called analysts, they always look at these similar types of charts, right? You have the Bitcoin halving events, the last 4 Bitcoin halving events, right? We have, let me see if I can zoom in on this for full screen. No, I can't. Doesn't matter. So we have the first halving event right here, second halving, 2016, third one 2020, fourth one 2024. And people always say, few months before the Bitcoin halving event, when did Bitcoin price bottom out, and then how many months after the Bitcoin halving event did Bitcoin price top out, and then they project that again and look at the same measurements for the last 3 halving events. However, if you're anyone that likes to do data analysis, this is very flawed, because even though these numbers, they kind of fall into similar ranges, we only have 3 data points. And even the 3 data points alone do not all agree with each other. I have looked at this cycle analysis before as well, because this was the only way you could do it. So this was our video from July 2023, where I looked at Bitcoin and my price prediction for Bitcoin in 2025. And this was the chart that I made. Basically, after the Bitcoin halving in 2012, we had 1 year of bullishness, 430 days of bearishness, and then 525 days of sideways. And we did that same analysis for the last 3 Bitcoin cycles. And the conclusion was that, we have a range. We have, right after the Bitcoin halving event, these green periods, they could last as short as 1 year, or they could extend as far out as 550 days. And that's a big range. And that was my kind of estimate, right? After the April 2024 Bitcoin halving event, this tells us that the Bitcoin cycle could end as early as April 2025 or extend all the way till the end of 2025. But obviously now, this is even getting more under question, because, are we saying until April next year, this cycle is going to end? Probably not. Looking at how the Fed has just pivoted, this doesn't really make that much sense anymore. And this is the meat and potato of this of today's episode, which is that I don't think you should look at these 3 data points alone anymore. I don't think this matters. No matter how you look at these date ranges, they are purely estimates. You just keep extending them out and try to make them work. And yes, we know the bull run is coming in the next year to 18 months, but that's about it. You can't do much more analysis on that. Instead, we need to go deeper and look at the actual drivers of these liquidity events. And that is not Bitcoin halving alone. So take a look at a couple charts I want to show you here. Number one is the Bitcoin chart overlaid over the M2 money supply chart. This is the what the M2 global supply is, this blue line. This is the total amount of cash that's across the top 5 central banks in the world. So here we have the US Fed, the European Central Bank, the Great Britain monetary policy maker, whatever the name is, their British Central Bank. We have the Chinese Central Bank, and then we have the Bank of Japan, the Japan Central Bank. With all of their money supply combined together, you have this chart. And when you overlay the price of Bitcoin with this chart, you get something very interesting. Notice how these two are super heavily correlated. You see, M2 global supply drops in 2014 to 2015. Bitcoin was in a bear market. Right when the blue line started to take up, the M2 money supply, Bitcoin started to go on its run. And in fact, look at how closely correlated these two metrics are from 2015 to 2017. This perfectly explains why we had an extended cycle on Bitcoin from 2015 to 2017. It wasn't because Bitcoin was early in its adoption or whatever. This is real. And then when you look at the last Bitcoin cycle in 2020, the turnaround point that kicked off the Bitcoin rally into exponential growth was also very clear. So you see right here, if we can zoom into 2020, right here, notice how the M2 global money supply had a sharp turn, right? So it dropped very sharp and then quickly started to bounce. What was this event? This was when March 2020, pandemic was officially confirmed, and the US Federal Reserve dropped interest rates, their target interest rate from 2% to 0%. And what that does is they effectively have to turn on the money printer and inflate the M2 global supply. And that's why this blue metric line started to go ballistic, uptrend aggressively. And right at that week, Bitcoin's price started to go ballistic at the same time. And you see the two pretty much topped out around the same period as well in February 2022. Even in the bear market, right? Early bear market, they were so closely correlated here. So this was the first chart that is so interesting that I have found, which, comparing this chart with these cycles, which one is more indicative of the difference in Bitcoin's last 3 cycles? Well, the Bitcoin halving cycle doesn't tell us anything. It only tells us one date, and then you just try to extrapolate based on previous cycle length. This doesn't explain why the 2016 halving, right, just has a long, drawn-out bull run, and why the 2020 halving has this COVID crash event somehow happened magically, just before the Bitcoin halving, and then Bitcoin has this correction and then has a sharp bull run. Why did that happen? People just say that, it happened because right around the Bitcoin halving event, Bitcoin drops in price, and then it rises sharply, and it's just because. When you look at the actual M2 money supply, this is all explained perfectly. So this is number one. And in order to treat this as a signal, 2 things you need to understand. Number one, when does Bitcoin actually top out in its each of its bull run? We need to look at the M2 global money supply growth year over year. This is the chart that you see on the thumbnail of this video. So let's take out the blue metric line. This is the absolute value of the M2 global money supply. Instead, let's look at the M2 growth. So this measures how quickly the M2 money supply is growing year over year. And you notice when the M2 growth year over year tops out and the money supply growth starts to dwindle and it starts to slow down, usually that's when Bitcoin tops out. This happened in May to June of 2024. It happened in February 2018, basically the exact top of the Bitcoin top. And then it happened at the first top of the last cycle in March 2021. And you see also this explains why we had an extended Bitcoin bull run from 2015 to 2017. It lasted for 2 years because the M2 money supply kept growing. It had a local top right here, but then it bounced back and started to grow faster. And because of that, Bitcoin continued to rally and had a second phase of the bull run in 2017. So with that said, how do we use this? Well, as long as we can get, if we can zoom in here, as long as we can get the M2 money supply year over year here to continue to grow, this green area line here to continue to grow, most likely Bitcoin will make new highs along with that and rally in an uptrend because these two are heavily correlated. And even the timing of it is very correlated. You can't really use Bitcoin halving this way because that's only a one-time event. Instead, with a metric like this, you can actively monitor it. Now, how do we know if the M2 money supply will rise or grow faster or will it shrink? Very simple. The money supply, M2, is directly inversely correlated with the US interest rate target. So how does this work? Here, directly from Investopedia, the federal funds rate, this is the rate, the target rate that Jerome Powell and all of their policymakers at the FOMC and the Federal Reserve, this is, when they say cut rates, this is the rate that they want to cut, the federal funds rate. Now, what is it and how is it determined? Well, take a look at here. The FOMC can't mandate a particular federal funds rate. Instead, the Federal Reserve System can adjust the money supply so that interest rates will move toward the target rate. By increasing the amount of money in the system, it can cause interest rates to fall. Conversely, by decreasing the money supply, it can make interest rates rise. Take that, put that in your head right now, and then read this. How does money supply affect interest rates? There is a key takeaway here. Money supply and interest rates have an inverse relationship. A larger money supply will lower the market interest rates, making it less expensive for consumers to borrow. Conversely, a smaller money supply tends to raise market interest rates, making it pricier for consumers to take out a loan. So effectively, since the US Fed has now announced a pivot and they will need to have a lower target interest rate starting from September 18th, what they need to do is they can't just come out and say, now the interest rate is this and now the interest rate is this. No, that's their target. Instead, in order to make this happen, right? Remember this chart, the federal funds effective rate. They can't decide this right away. The only thing that the two things that they can do, number one is set something called discount rate. And number two is they need to actually print more money, increase the M2 money supply. And then as a result, the federal funds effective rate can drop. So this doesn't get clearer than this. In order for the Federal Reserve to decrease interest rates, now that they have set a target, which is lower than what is at currently, they need to print more money. They need to make M2 money supply rise in order to decrease the interest rate. The interest rate is a result of what they do with the money supply. So with that being said, we understand it now. What will happen with the M2 money supply? This blue line now that they have announced a pivot of cutting rates, every time that they cut the target rate, they have to raise the M2 global supply by printing money. And the M2 growth year over year, this green area line, also has to rise. It doesn't get clearer than that. So this is why this is a chart that's much clearer, that tells us why the Bitcoin bull run is about to start and why the Federal Reserve pivot and the rate cut is so significant. It's not because like, oh, what people perceive, rates are low, and now, Bitcoin price should rise or whatever. They literally will have to turn on the money printer in order to decrease interest rates anyways. And this is why people are saying like, oh, what does this mean? Like, is this QE? Is it not? No, like when they announce a pivot, when they cut rates, this is QE. It's happening. The money printer is getting turned on starting from September 18th. So this is the first thing. First chart that's very significant that I think actually matters. That tells us the Bitcoin bull run is starting. Now, notice in the title of this video, I said the Bitcoin bull run will end in 15 months. So 15 months from the time of recording is right around end of 2025. Why is that the case? Why do I think that instead of like comparing that date to the Bitcoin halving event? Because that closely correlates to how the M2 money supply will grow. Even though the Federal Reserve has announced that they are pivoting their rate cuts, they're pivoting their rate policy and they will cut rates from now, how long will they actually keep this up? How long will they cut rates and how many times will they cut? Very simple. We go back to our CME Fed Watch tool and look at how long they will be cutting rates in the next 12 months of FOMC. You see all the meeting dates right here on the left. So the best way to look at this is with the aggregated target rate here, the probabilities. So this tool, when aggregated, gives us a view into the cumulative number of hikes or cuts that the market is pricing by a certain point in the future. So from this next FOMC on September 18th until the next year at the same date, September 17th, how many rate cuts will we have? Well, people are pricing in 1, 2, 3, 4, 5, 6, 7, 8, at least 8 rate cuts by July 30th, 2025. So that is 1, 2, 3, 4, 5, 6, 7, 8 meetings. That's what's happening. For the next 8 FOMC meetings, there will be at least 8 rate cuts. And until the 9th next FOMC meeting in September 2025, we could have the 9th cut or we might not have it. People are kind of getting split for this probability 1 year out from now. This is going to be very accurate because like we said over the past year, the CME Fed Watch tool has been very, very, very accurate, at least 1 year out into the future. Knowing this, what's going to happen? Every FOMC meeting, remember how the Fed can work, right? Once they go into a rate cut cycle, they can't just randomly pivot and pause or randomly say we're going to hike one time and then cut the next time. No, it's either they cut slowly or they cut aggressively. So from September 18, 2024 to at least July 2025, there will be constant rate cuts every FOMC meeting, which means after every FOMC meeting, they cut the target rates, and then what they have to do is they have to print more money. Remember on the M2 global supply, print more money, and the M2 supply chart goes up, which correlates heavily with Bitcoin price going up. Very simple. So with that being said, we know this is happening. And if you want to go a little bit deeper, there is a target rate that the Federal Reserve has on their website, which is that by the end of 2025, they have a target, I think it's like around 325 basis points. Don't quote me on that. But in the 2016 target, they do have a target lower. But that is not decided. That is just something that they threw out there. So TLDR is we will at least see the next 12 to 15 months until the end of 2025 to be in the rate cut cycle, which means M2 supply goes up, Bitcoin will run. Easy. Now, going into 2026, that's the actual uncertainty when it comes to M2 money supply. Will they slow down the rate of increase? In that case, like we could see this green area line, right, going up like this, but then potentially top out end of 2025. Or if next year the Jerome Powell and the Federal Reserve says, okay, they're actually more dovish than expected, and they expect more rate cuts going to 2026, then this kind of green area line can extend further. So that's the only uncertainty we know. I think the very clear stance I have right now is 2025, rate cuts will happen, M2 supply will grow, thus Bitcoin bull run pretty much confirmed for the next 12 to 15 months until end of 2025. Only after that, will it top out end of 2025, or do we get much deeper into 2026? That is the only uncertainty. And that is not because like this. That is not because of what happens in the last 3 Bitcoin halving events. Because you can't possibly take these charts and point out at a random months that is end of 2025 and say this is when it's going to happen. And you can't even follow that up. Like, how do you monitor the situation and say we are going to extend into 2026, or is this going to end 2025? You can't do a productive analysis on that. And that's why, I'm kind of ditching this concept of the traditional 4-year cycle for Bitcoin halving and the Bitcoin cycles. Instead, we need to actually monitor the real money supply, the real liquidity that is driving all risk-on assets. And that's this is the most important chart, the first most important chart that we need to watch, the M2 global money supply growth. And in order to project this, you need to watch what the Federal Reserve has their fund rate target set on at each FOMC meeting. This is why macro matters. Like, I've been following this for over a year, and I'm finally starting to understand why this matters. Okay, this is number one. Number two is a new liquidity chart that extends even further out across larger liquidity cycles. So on Twitter, people have been circulating these charts called the Global Liquidity Cycle. And this is the Global Liquidity Index. So how this works is I found the original article, Global Liquidity Index. You can Google this title and you'll find it on Financial Times. So what this cycle does is it looks at all kinds of metrics, including the money supply from all the central banks, but also things like local lending from, what is it? Yeah, here, it looks at the US markets, the US Fed's QE or quantitative tightening or quantitative easing. It looks like the Bank of China. It looks at Bank of Japan. It looks like ECB, British Bank, etc. But it also looks at the where is it? Kind of getting hard to find. But yeah, it also looks at the local banks and how much they're lending to their businesses. Let's just say that. I'm not an expert on this, but with those combined, it's able to put together this metric called global liquidity. And typically, this liquidity also cycles. And the cycle period extends every 65 months. Notice how it says 65-month cycle here. And in order to track this, The only way to do this is to subscribe to these guys called Capital Wars. They're actually the inventor of this financial model. Back in 1998, I want to say this is actually a very, very old school model. And they have kept tracking this for the past like 25 years. Pretty epic, actually. So this is all the data that they have over the past 30 years. And you see, it's not completely accurate, but it does cycle like this. So the dotted chart in red is the 65 months wave of the hypothetical period of this liquidity cycle. And the black line here is the real liquidity cycle based on all the metrics that they take into account, including the central bank liquidity, but also with local lending and credit liquidity. And notice how 2020, this liquidity, the global liquidity, exactly coincided with the pandemic and with how the liquidity injection worked. So when the US Federal Reserve cut interest rates in an instant from 2% to 0% target and started printing very aggressively, we saw this March 2020 sharp increase, followed by topping out in mid 2021 and then sharp fall over that 2-year period where the Federal Reserve was hiking rates. So now this is finally bouncing back. And what's very interesting here is these guys actually look at the sensitivity of different risk-on assets to this metric of global liquidity. So not only do they track this liquidity cycle and give you a perspective of, every 5 years when the asset class, when all risk-on assets tend to bottom out and when all risk-on assets tend to top out. Very long-term metric. But also they look at something called sensitivity to global liquidity shock. This is when each time that there is a 10% increase in global liquidity, all the risk-on assets, what they do in response in price. So you see, you have the S&P, you have commodities, you have gold, Bitcoin, Ethereum, etc. Notice how Bitcoin, Ethereum are some of the most reflexive assets to this increase in global liquidity. And right here, sensitivity to global liquidity, you have Bitcoin in red, you have Ethereum in orange, and basically you can extend this out to all other cryptos. And then you have the S&P, which is like not as sharp. So this is why, even though the S&P is like already rallying, once this global liquidity starts to come in from the end of this year until the end of 2025, what's much more likely to pump is actually the crypto market, not S&P, not other traditional markets, because those are not as sensitive to global liquidity. And going back to this original piece by the that's published end of 2023. So the analysts expect the latest liquidity upswing to peak before late 2025. And going back to the oscillations over the mapped over that 65 months wave, you see basically this peaks out right around here, end of 2025. This is actually the real liquidity cycle that comes from metrics of liquidity instead of metrics of price. Remember, this black line is, central bank printing and, lending and borrowing going on across the world. These guys are macro experts. They don't look at asset prices for the cycle. Instead, they look at amount of money that people can use to invest, essentially. And that cycle is real because that comes from real metrics. And also here, they have much more data points. They have a much longer history going back to the 1970s. This is the real cycle. And the cycle length is not 4 years. Yes, it kind of coincided with the Bitcoin halving event, which happens every 4 years, because 2020 just so happened because of COVID. boom, we have a global liquidity cycle rush, and then Bitcoin halving just so happened to be 2020. And also in 2016, Bitcoin halving event happened basically right here, and this was right around the top of the global liquidity cycle. That's it. Like, that's the only 2 times that it has coincided. Going back to 2012, it gets even more thrown off. This explains much more clearly to me why the Bitcoin cycles, they always kind of sometimes extend, sometimes they shorten. It's because the cycles are not based on Bitcoin halving events and random date extrapolations around the Bitcoin halving events. Instead, they're based on the macro global liquidity cycles, which I'm not an expert of, but I just use this to keep track of. And they're based on what the central banks are doing, what the US Federal Reserve is doing, which is they announce their federal fund rate target, and then they start printing money or burning money. And then in turn, because people don't have as much money to invest, and it trickles down to all the risk on assets, including Bitcoin, which shows Bitcoin is the most reflexive to that. And it moves in very heavy correlation to these 2 metrics. That's the real cycle. Let me just give you a quick summary. So basically, the typical Bitcoin halving cycles is most likely a myth, looking at how the 2024 cycle is not directly correlating to when the Bitcoin halving event has happened. Instead, it's much more closely correlated to 2 other metrics of global liquidity, which is number 1, the M2 money supply. This is when the US Federal Reserve has a higher or lower target interest rate, and they have to do QE and print money, or quantitative tightening and burn money. And when this happens, the price of Bitcoin much more closely correlates with the M2 money supply growth or shrinkage. That's number 1. That's one metric that we can monitor. And we know that the M2 money supply will continue to grow until the end of 2025 because the rate cuts are happening and will continue to do so for the next 12 to 15 months. So this is number 1. Bitcoin will go on a rally for the next 12 to 15 months. Number 2, global liquidity cycle also is on the rally right now and will continue to do so until at least end of 2025. So that also drives Bitcoin because Bitcoin has the highest reflexivity to this metric. Now, this is when I think the Bitcoin bull run could potentially end by end of 2025 in 15 months. After that, will Bitcoin continue to rally in 2026? For now, we don't know. We need to monitor these 2 metrics in 2025 to see if the FOMC makes a pivot again and stops cutting rates, or will continue to cut rates into 2026. And also the global liquidity will continue to rise until 2026. If they do, then Bitcoin can continue to rally and have a longer bull run. But if the 2 metrics top out by the end of 2025, then Bitcoin likely also tops out by end of 2025. And that's the real Bitcoin cycle, not some average date range that you look at based on like only a few data points around the Bitcoin halving time. That's a summary for today. I think that's very eye-opening for me, and I will continue to monitor this for the next year to 2 years. I think this is very useful. So hopefully you guys have found this useful as well. And let's see if this analysis is correct and if we can use it accurately to make a decision right here. And my decision right now is going to stay long in Bitcoin and in crypto because I truly believe the bull run is happening, and it's starting now and will continue until end of 2025. Okay, that's it. Thank you guys for joining this live stream. Before I go, 2 things you should follow me. Number 1, follow me on Twitter or X at VirtualBacon0x. This is where I drop day-to-day alpha before I make them into these in-depth videos. And number 2, make sure to go on virtualbacon.com or use the link in the description. We are opening up our VIP program very soon. This is an extension of what we had before in our Discord. It's a free VIP trading group with signals, with courses, etc. And you don't need to pay. You just need to sign up with one of our exchange partners. More details to be released soon on my website, so stay tuned for that. That's it. Thank you guys, and I will see you on the next video. And